Hello, Namaskar. You're watching BT TV. I'm Tanya Aneja. Well, the Nifty 50 index posted a 30% return in FY24, and investing in Nifty 50 index funds has become extremely convenient, all thanks to the digital platforms. So in this video, we are going to discuss index funds, particularly Nifty 50 index funds. So index funds are mutual fund schemes that track a stock market index, for example, the Nifty 50. It is a type of mutual fund or exchange traded fund designed to replicate the performance of a specific financial market index. So rather than relying on active fund managers to select individual stocks or securities, index funds aim to mirror the overall performance of the underlying index. Imagine the Nifty 50 index, which represents the performance of the 50 largest publicly traded companies in India. An index fund that tracks the Nifty 50 would invest in these 50 companies' stocks in proportion to their market capitalizations. So by doing so, the index fund aims to replicate the overall performance of the Nifty 50. So investors who buy shares in this index fund effectively own a piece of all 50 companies in the index. The fund does not rely on active stock picking. Instead, it mirrors the index composition. So this approach provides diversification and typically comes with lower fees compared to actively managed funds. So are there any other advantages of these index funds? Well, yes, there are many. Index funds tend to be tax efficient compared to other investments. They often offer benefits like reduced long-term capital gains taxes since you're not actively buying and selling holdings. These funds do not demand stock selection skills, making them accessible to anyone with savings to invest. Now, index mutual funds are also known for their cost effectiveness in contrast to actively managed funds with higher fees and potential underperformance. These index funds keep costs low. This is because index fund managers replicate index holdings without incurring additional fees. So you can invest in these funds through mobile apps or asset management companies' website. Experts also believe that index funds are intended for investors with a 7-year or longer investment horizon. Short-term volatility in these funds has been seen, although they average out over the long run. You may link your long-term investing objectives with these assets and remain involved for as long as possible. In India, investors have various types of index funds to consider, like sector-based index funds, debt index funds, market capitalization index funds, and many more. Recently, Axis Mutual Fund launched the Nifty Bank Index Funds, and the launch of Axis Nifty Bank Index Fund comes at a time when India's banking sector continues to exhibit growth and resilience. So this was all about the index funds, but lots more coming up for you only on BT TV. So stay tuned, and many thanks for watching.